All right, thanks for joining us here today on a Monday morning. I'm Marlon Bowling. In case you missed it earlier this morning, USDA had an overnight export sale to talk about. We accomplished one transaction over the weekend, and it was a sale of soybeans. They were specified to go to China, and this time around it was 123,000 tons that'll be going to China. So we now have put an end to that string of vacant selling days here. How are the markets doing in the face of this positive development? Let's start with the corn, shall we? Let's go to the board. Our quotes are from Bar Chart. Corn struggling. We're down 4.5 cents on December. We're at 4.71 3/4. That's 7 cents off of its overnight high. Well, with that export sale of beans, what do you think they're doing? I have my guess. We are down, and man, they are expanding to the downside. November down 18 now, 13.22 1/4. Yikes, we're only a penny from our low of the day. We're now 22 cents off of our overnight high in the November soybeans at this point. Meanwhile, in Chicago wheat, December is down 11 at 5.93 1/4. Believe it or not, that has bounced about 5 cents off of its earlier low today, but it's about 11 cents off of its overnight high. Kansas City wheat, December, down 15 1/4. We're at 7.31 1/4 right now. That would be about 13 cents off of its overnight high. In Minneapolis, you have December now down 12 3/4 at 7.76 1/4. Just a nasty day in the grains. On the cotton market, here we have eked out a higher trade today. December is still 38 points higher at 86.82, but it's drifting lower. Let me do the math here. We're off of our earlier high by about 70 points now from overnight in that cotton trade. Well, we have the one and only Chris Swift with us in studio. He's sitting right next to me here. Always a treat to get to talk with you, Chris, about what's going on in the markets. You could have picked a better grain day to come in.
I tell you, it looks like everything's a little softer this morning. So.
Yeah, what's up with that anyway? How come?
No, I think just last week everything was higher. I mean, the beans were really no lower. The corn held its own. All the cattle were higher. Energies were higher. So I think maybe just a little bit of a risk off. We talked about a little bit this morning. It's really about it. The dollar continues to be strong. You know, now we're at the 105 handle for the dollar, and it makes our exports a little bit more difficult. And that's what a lot of this is trying to do, is keep more domestic product at home to kind of suppress some of the inflationary aspects.
Let's take a look at that dollar value right now. Let's bring up the U.S. dollar index. Kind of just holding steady today. It's still well above 105 at 105.285, pretty close to the high of the day. Just down 40 points, but that's not much of a move at all. On the crude oil trade, we were talking about this earlier. It breached $92, Chris. 92.05 was the high. Now we're at 91.70. That's up 93 cents per barrel right now, and that just makes me really nervous because I commute a lot. And I'm not looking forward to this. Is this going to be a trend that continues into the winter?
Well, right now it probably is. If we look at the combines rolling right now, they're rolling on, I believe, pretty close to the most expensive diesel fuel at harvest that we've ever seen. So that's an aspect that we have to continue with. And again, there's been no change in our policy of energy, so there really shouldn't be any thought to change the direction of price.
So you would think that it would be supportive to the corn market through its ethanol connection, right?
Right.
But if we look at a corn chart here on a December corn chart, it just looks so ugly right now. Where's the support? I mean, you have crude oil making really big moves to the upside and corn going just the exact opposite.
Well, and then there's a little bit of discussion about that because we look at the price of oil and then we look at the price of corn and we think the differentials are very wide apart right now. But then you look at how much corn we've got, and we're going to have over probably a 2 billion bushel carryout at the end of next year. So we have right now ample plenty corn, it looks like, to even go through any excess demand that we could get from the gasoline.
You said you saw a fair amount of corn being taken out over the weekend?
I went to West Tennessee this weekend, and there was quite a bit of corn being shelled up there. It's really dry up there, but it's still very nice. It still has some green and everything, but the corn was dried back enough, and the beans looked really good.
So at this point, if you haven't done any marketing by now, do you think it's better to just wait?
Really, it depends on which one you're marketing. If you're looking at beans are still above 13. So that's a pretty interesting fashion. They haven't been much above 14, but yet that's a are real far away from 10 or 11. So it's kind of, at some point in time, you got to pin the tail on the donkey for your marketing. And this might not be a bad opportunity to do so in beans for the farmer. Somebody that needs the bean oil or needs the bean meal might sit back for a little bit, let the harvest pressure get over with, and then try to pick up the products a little bit lower.
Pin the tail on the donkey.
Yeah.
I should have tried that when I was farming.
I did not coin that, so I can't take credit for it, but I think it's a great way to put it.
Well, probably more accurate than what I did. All right, we'll come back in a moment. We'll take a look at the livestock trade after this. All right, we're back talking with Chris Swift, and let's take a look at live cattle, see how they're performing so far. We're about 45 minutes into our trading session. Still sagging. We have October down 42 cents. December down 42 at 191.40. Let me ask you here, Chris, where do you see more volume these days? Are we in December now with most of it?
December. October is still a very vibrant month, but December is getting the increase in open interest now.
It is. Yeah. Okay. And then I wanted to point out the April. We were watching that last, I think, Friday, right, where it got within just a whisker of $200. Last trade was 199.72. I'm sorry, that was the high this morning. We're now at 199.10. That's down 65. It's going to go, isn't it?
It's some high dollar cattle. I'll say that.
Yeah,
it's some high dollar cattle.
$200. You think it's
you know, it's always possible. You're that
out.
close to it, so it's always possible. But you got to remember, right now we're really squeezing the margins in the cattle industry. Every sector is being squeezed because the price is elevated. It's really difficult to get it much higher than what it is right now, and all of our input costs just continue to soar. So right now it's kind of a margin ordeal, and it will break loose sometime in the next couple of weeks. We're already seeing lower boxes out there, so it's going to break loose.
If nothing else, I can imagine that there would be some technicians or algo traders out there that are just licking their chops at $200 stops.
Absolutely, and we've seen some activity.
Go harvest them,
yeah, so last week we saw a big increase in open interest the first part of the week, and then right at the end of the week we saw a big decline in open interest. So there's a lot of people interested in the cattle market right now.
All right, let's take a look at what the feeders are doing right now, and are they doing the same as live cattle? Oh, well, a lot more pressure there. You have October now down $1.97 to $262.50. Yikes, that's getting close to $2 off of our earlier high today. We're a dime off of our low. Lean hog trade at this point in the day, we have the October down 52, but December down $1.30 at 73.80. Goodness, there's bearishness all around.
Yeah.
I don't see a plus sign anywhere.
No, and of course last week again we were higher in everything. So to see it kind of start off this week is not anything out of the ordinary. And the hog market really hadn't done much of anything. It's very stagnant right now. Pretty big range, about a $6 range it's been trading in. And of course cattle every day put on a dollar or two last week. So I think it's just a little breathing more than anything.
So if there was a gold star to be awarded this morning, it would have to go to cotton. It stands alone. It's about the only gainer out there. So, Chris, thank you for coming in.
Always a pleasure, Marlon.
Yeah,
yes,
I love having you come in.
Thank
Chris
you.
Swift of Swift Trading here in Nashville. Mark, I'll turn it back to you.
Very good. Good to see Chris again as well.